Hey guys, in this video I'm going to be explaining market profile or TPO charts and how we can use them in our trading through the lens of auction market theory. So first thing we need to understand is how do we go from a candlestick chart to a TPO or market profile. So here on the left we can see this is a 30-minute chart with candlestick bars. We can see the open, high, low, close of each bar. Now on the right we can see a TPO chart, and in the middle we can see an expanded TPO chart. So a TPO chart is split up into periods, each period being 30 minutes. So it looks quite similar to the 30-minute chart. Essentially what it's doing is plotting blocks or letters for the range of each bar. If it was in letters, mine is in blocks. Each column would have a corresponding letter. The first 30 minutes would be A, second 30 minutes would be B, and so on. So through this, we can see the range of each bar, and to get to something like this, they are essentially pushed down onto one side, and that gives us a distribution showing us where we spent the most time, where we spent few time, and gives us some information that we can use in our trading. Now, to fully understand how we can use this, we first need to understand a little bit about auction market theory. And in auction market theory, there are two states of market. There is imbalance and balance. Now, imbalance, as we can see here on the left, is when we have a trending market that is dominated by one side. In this example, it's dominated by the sellers, and this shows us that there is a disagreement on price or there is a lack of equilibrium. On the other hand, we can be in a state of balance. In a state of balance, the market is ranging, it's lower volatility, the supply and the demand is in equilibrium, and participants generally agree on price as to why it is staying in the range. And on a TPO chart, this will often show as a normal distribution or a bell curve, or what you would say a D shape. Now, how we can use this is in a balancing market, it will create a profile like this that looks like a D. And we have a few components that we can use on the TPO chart to help us contextualize the market. So the TPO chart has a value area high, a value area low, and those encapsulate the value area. Now this shows us where 68 or 78% of time was spent. And if you think about it in terms of a product, if you have a product selling for $400 to $600, normally near the center is where most of the transactions are going to happen. Few people are willing to sell for $400, few people are willing to buy at $600, and that's what creates this taper off effect near the edges. And so we can say this value area shows us what is fair value. These prices near the bottom would be super cheap and near the top would be overpriced. So if we are expecting price to continue ranging, we can often use these prices as cheap and expensive points and points of interest for reversals. And same thing, if we're looking for breakouts, we can look at these for points of reference when we are accepting outside of the value area and we are looking for the market to break out. Now, inside of this is often useful for balancing markets. When a market is in imbalance, the value area becomes a lot less useful to us. Now, when the market is in an imbalance, some things that we can see on a TPO chart, one of them is single prints or singles. So as you can see here, I have denoted this by a blue box. So singles are anywhere where we have one bar in the middle of the chart. So as you can see here, we went straight through this area and we never retraced all the way back into it. So it created a single print. Same thing here. And this can be indicative of a breakout imbalance where we are pushing away from previous value areas. On the other hand, we have something similar. This is called a buying or selling tail. This is when we have singles at the edge of the profile. So as you can see here, this is often indicative of a strong reaction. In this case, we went straight down and went straight back up, and it is showing us that we have a strong price rejection here at the low. Same thing here, we have a strong price rejection at the high. Can be a sign of exhaustion, and we often also term these as an excess. In contrast to this, we have something called a poor high or poor low. So this is when instead of having singles at the high or the low, we have two columns or more. And these are often weak rejections where we would expect, if it is a good rejection, it would reach that price and then reject completely instead of repeatedly returning to that area. And these often can be seen on a normal chart as a double top or a double bottom. We look at these as areas to be tested again, whether that to be breakout or we want to have that area be taken out and then see an excess or see a buying or selling tail to show us that there is a strong price reaction and buyers or sellers are not willing to let price go lower or higher. So this would be an example. As you can see, this is this TPO chart here. We have the poor low here. So we would expect either to have a breakout or to come down and create an excess at the low. And as you can see here, we came down, created a buying tail here at the low and rejected. And we would call this a repair. We expect for poor lows or poor highs to be repaired or to be taken out and either reverse or have a breakout from them. Now, to understand the difference between volume profile and TPO charts, it's not much different. The only difference is obviously volume profile is looking at volume. TPO charts are looking at time spent and also a little bit more on the side of looking at the structure, since it is essentially tracking the range or the highs and the lows of each 30 minutes. And that is how we can see those. So as you can see here, we have a little bit more information on the volume profile as to where people are positioned. On the TPO chart, we can see most of the time was actually just spent here. So you can see they're very similar, but there is a little bit of a difference between them. And some terms that we often hear when referring to TPO charts or volume profile charts are the value area low, value area high, point of control, time price opportunity, market profile, auction market theory, and high volume node or low volume node, which is more so used on volume profile. High volume node is just where we have a node of high volume. Low volume node is something where we would say it's kind of like a valley where we have low volume, and these coincide with single prints on a TPO chart. Now that's pretty much it for now, and thanks for watching.